Hello there. Welcome to Accounting Grade 12. I've got a question that we have here, a question from June 2023 that we want to look at. The question is question 2, and the question is on cash flow statement and financial indicators. So if you go there at the beginning of the question, we have got the number of marks that are there in the question. The question is 40 marks, and it requires us to spend 32 minutes on that question. So let's be careful in terms of time management so that we don't waste much time on one question. So we move on to the question. On the first part of the question, that is 2.1, the question reads, indicate whether the following statements are true or false. Write only true or false next to the question number. That is 2.1.1 to 2.1.3. Right. So on the first part of the question is saying the internal auditors are responsible for preparing the financial statements of a company. And we know that internal auditors, their main duty is to oversee in terms of whether the workers of the company are abiding by the financial, the internal controls of the company, and they are not making any mistakes in terms of the preparation of financial statements, so that when the external auditors come, they do not find any irregularities, and they do not spend much of the time trying to audit the company. So here, internal auditors, we know they are not responsible for preparing the financial statements, but they are only there to control and make sure that mistakes are not being done, internal controls are being abided by. So they are on a correctional mission there at that company, but they will be working at that company. Right. So this statement becomes false. So the most appropriate there is false. Then we go to the next one. The external auditors prepares relevant control measures for accounting procedures and ensure that they are followed. We know that external auditors, their main duty is to come at the business and provide an independent report in terms of how the financial statements were being prepared at a certain company. So external auditors are not responsible for preparing relevant control measures. That is the responsibility of internal auditors. So this one also becomes false. So we can indicate it as what? As false. Then we go to the next one. Is depreciation is added back into the cash flow statement as it is regarded as a non-cash expense, which is true. Depreciation is a non-cash expense, and we add it back because initially we would have subtracted it in the income statement, and we include it under operating expenses, but it's a non-cash item. So in the cash flow statement, remember the cash flow statement is prepared on the cash basis. We are only concerned with actual movement of cash in and out of the business. And we should also take note that the income statement is prepared on the accrual basis. And that's why it takes into account some non-cash items. So that's the difference now that we have between the income and the income statement and the cash flow statement. So here, the issue of adding back depreciation is true. So here, the answer is that it is true. Then we move on to the second part. The second part, we are required. Let's look at the requirement in terms of the second part. That is 2.2. The question, it reads, the information below relates to Benforce Limited, and the required part in terms of 2.2.1. It says prepare the ordinary share capital note on 28 February 2023. So we want now to prepare that ordinary share capital note that is at the end of the year, which is 28 February 2022. And then when we are preparing this ordinary share capital note, we know that we are going to start with the balance at the beginning of the year. And then we try to see adjustments in terms of ordinary shares that were issued during the year. We add them, and then we check if there's a repurchase that was done, and we check the repurchase, and we adjust for it as a subtraction. Remember, when we repurchase, money is going out of the business, we show it as a negative figure in the ordinary share capital note, and then issue of shares, we show it as a positive figure in the ordinary share capital note. And also we have to take note that when we are repurchasing, we repurchase at the average share price. And whenever the repurchase was done with a price that is above the average share price, with the difference above the average share price, we have to subtract it in the retained income note. We are only subtract the average share price in the what, in the ordinary share capital note. So that is what is important. So let's check in terms of what we are given in the answer book, because remember some of the figures will be pre-entered. So we have to check, right? This is the ordinary share capital note that we have in the answer book, and then we are given the figure of the in terms of the quantity of the owner shares at the beginning of the year, which is 900,000. And then we also have a figure that is pre-entered, is the value of the owner shares at the end of the year is 5,292,000. So what we want to check in the question is, what do we have the value for owner shares at the beginning on the list of balances? Then we are going to put it here. Then we check for issues and repurchases that were done during the year. And remember, we have to take notes which one started the repurchase or the issue, and then we enter it with the one that was done first. We have to enter it first there so that we make our adjustments correctly. So we go back to our question to check that. So if you go to our question in the list of balances, this is the list of balances that we have. We have a list of balances, and we've got this at the part that we have the owner share capital here. We are given, remember, this is 2023, this column is 2023, and this one is 2022. So 2022 on 20th February 2022, that's where we are having the beginning of the year, and here we have the end of the year. So at the beginning it's a question mark, which means this figure we are not given. We are only going to find this figure as a balanced figure. Then we go to this one is the one that is pre-entered. So we check now in terms of repurchase and issues that were done during the year. We are told the first point is saying the authorized share capital comprised of 1,200,000 ordinary shares. This figure of ordinary share capital is not entered in the ordinary share capital note. It only shows us the maximum number of shares that are supposed to be issued by a company, but we don't indicate it in terms of the ordinary share capital note. Even in the statement of financial position, it can only be shown that is the authorized, but it's not going to affect the calculations that are going to be there in the statement of financial position. We only show it as a disclosure procedure, right? Then we go on to the second point, saying on 1 March 2022, 900,000 ordinary shares were issued. So it means this is the figure, the figure of the quantity of the shares that were issued by the beginning of the year. We have 900,000 ordinary shares that were there. Then we go to this is the figure that is pre-entered again. Then we go on to the next point. The company issued 150 ordinary shares at $6. Sorry, at R6.30 per share on 1 May 2022. So the issue is, these were the shares that were issued. They were issued on 1 May 2022. And also check in terms of the repurchase, the date of the repurchase again. The date of the repurchase is 3rd August. That's when we've got 70,000 ordinary shares were repurchased. So it means the issue of shares was the one that started. So we're going to enter this one first. Issue of shares, 150 ordinary shares at R6.30 per share. So we go there and enter that one. We enter that one first there. So we are going to say shares issued on 1 May. Here, shares issued. And they were issued at 6:30 each. It issued at 6:30 each. So we have 150,000 shares. So this is the column. Remember, this is the column of the quantity of the shares, which is we are told that 150,000 were issued. So we have 150,000 here, right? And then on the value there, we are just going to say 150,000. Then we multiply by 6 0.30 to get the value. Then we get 945,000. Right. So that is what we have in terms of shares that were issued. Then we go back again to check in terms of the repurchase, what transpired. And then we are told that on 30 August 2022, 70,000 ordinary shares were repurchased from shareholders. EFT payments for 437,500 were authorized for these shares. Right. Here, this is the we are told the value of the shares that were repurchased is 437,500. But we are not sure of the average share price. Remember, we said when there's a repurchase, the repurchase has to be done on the average share price. So if you go to our ordinary share capital note there, we cannot find the average share price before the shares were repurchased. Because what happens is the repurchase that has to be done, it has to be done at average share price, and we check above that all the shares that are there, and then we say total value of the shares here is a numerator, then we divide by the quantity of the shares that were there before the repurchase. So here we're just supposed to say 945,000, then we add the value here, becomes our numerator, then we divide it by total quantity before the repurchase, which is 900,000 plus 150,000. But in this case, we cannot find that figure because we do not have the value at the beginning. So what we are going to apply here is that the value at the end is going to apply for the average share price for the repurchase, because the average share price of the repurchase is going to apply, or is going to also to apply to the average share price at the end, because there were no other shares that were repurchased after. So we can just find the average share price here. So we are told that we have got 70,000 shares that were repurchased. So we can just say here shares repurchased. And then we are told that 70,000 of the shares were repurchased. So here is 70,000. Remember, I said whenever there's a repurchase, we show as a negative. So these ones we show them in brackets. And then the value of the repurchase, we do not know it. We do not know it because we are not aware of the average share price yet. We can only find the average share price using the values at the end here. So we have this value pre-entered. Then we check now what number of shares do we have at the end now. So we can find this figure by saying 900,000 plus 150, then minus 70,000. So we are going to say 900,000. Then we add 150,000. Then we are going to subtract the 70,000 that were repurchased. So if you do that, you get 980,000. So it means here we have 980,000. So that's what the scenario that we have. So to find the average share price now at the end, we say this total value over this one. So we are just going to say 5,292,000. Then we divide by 980,000. So if you do that correctly, you're supposed to find 5 rand 40. So this is the average share price that is going to apply on the repurchase. So here you can say shares repurchased at what? It's 5 rand 40. So to find the value of the repurchase here now, we are now saying 5 rand 40 times 70,000. Then we get 378,000. And remember, this is a repurchase, so show it in brackets. So that is what we have there. And then now the value at the beginning, now we can find it as a balancing figure there. So the issue that we have there is that we are going to say this one is the value that we want. It maybe you can just call it X because it's an unknown. We can just say X plus 945,000 minus 378,000. If you do that, you get this figure, which is 5,292,000. So the issue is we make X sharp with the formula there, which means this one is going to come the other side, this one coming the other side, changing signs. Then it becomes X is equals to this one. When it comes this side, it becomes a negative. So it's 5,292,000. Then this one becomes a negative. So you're saying minus 945,000. Then this one becomes a positive. So you can say plus 378,000. So you can now find this figure. So if you do that correctly, you are going to get 4,725,000. So that is what we have there. So that's the ordinary share capital note. And then we go to the next one. The next one is on to calculate income tax. Next one, we want to calculate income tax there. So we try to find out in the question what we have in terms of the balances of income tax. So when calculating this income tax, we have to know that when we income tax can be a current liability at the beginning, also can be a current asset at the beginning, and also can be a current liability at the end, and also can be a current asset at the end. So we have to know where to place it in terms of when we have a SARS income tax account. When we have a current liability at the beginning, it will be on the credit side. We put it on the credit side. This is beginning. And then when we have got a current asset at the beginning, it comes on the debit side. But the reverse is true at the end. Current liability now at the end will come on the opposite side, which is year. So at the end to come on the debit. This is now at the end, current liability at the end. Then current asset at the end also will come this side, which is the credit side. So this is current asset at the end. And then we also have to know that the tax amount, the income tax amount for the year, which is going to be charged in the income statement, will come on the credit side. So the balance, the figure that we'll be looking at, or trying to find on the debit side here, and that balance should go to the bank. Remember, this is the payment of tax for the year that we want to calculate and put it in the cash flow statement. Remember, in the cash flow statement, we said we are entering the actual movement of cash, so it has to be on the debit side here, and we debit it in the SARS income tax account, and then we are going to credit in the bank account. So that is what happens there. So we are going just to follow that as we try to find the figure for income tax that was paid for the year, right? So we go to our list of balances that we are given there. If you go to our list of balances that we are given there, we have SARS income tax year, and this is the beginning. This column is the beginning, and this one is the end. So you would see that here is the current asset. We've got a current asset of income tax at the beginning, and we have also a current asset at the end. We don't have any of tax that is of income tax that is under the current liabilities in this question. So this one is going to be more simplified. So what we are going to do there, if you open that T account, you are going to see that at the beginning, current asset at the beginning is on the debit side. So you're going to put on 9,200 here. Then current asset at the end is 8,400 will come on the credit side. And we now look at the income tax for the year. That one we find it on the figures from the profit and loss that we are given there. We have figures that we are given there from the income statement here. We are given net profit before tax, and then we are given net profit after tax. So to find the tax for the year now, we are saying net profit before tax minus net profit after tax. So we are just going to say 1,900,000. Then we subtract 1,330,000. So when you do that, Let's try to calculate and see what figure we find there. We are saying 1,900,000, and then we subtract 1,330,000. Right, we get 570. So this is the 570 that is going to come. That is going to come on the credit. Remember, the income tax for the year, we said we are going to credit it in the SARS income tax account, and then we are going to debit it in the income statement as we subtract it there. So let's try to go and put the 570 on the credit side. So what it means, we've got 570 there. 570,000. So to summarize it in a working, the figure that we want is here, that we said we debit in the SARS income tax and then we credit bank. So we are just going to say 570,000, then we add 8,400, and then we subtract 9,200. So if you do that, you get 569,200. So that's the figure for tax. So if you go to our answer book, we are just going to summarize that. We go to our answer book. We are just going to summarize that under tax. So this is the section for tax. So we are just going to say 570,000, then we add 8,400, then we subtract 9,200. Then having done that, obviously you get 569,200. So that's what we have there, and we will get your 4 marks there. So the next one is to calculate the net change in cash and cash equivalents. Calculation of net change in cash and cash equivalents. And also, when you are calculating this figure, we have to know that that is on the bottom of the cash flow, of the statement of cash flow. We say opening balance of cash and cash equivalents. We add net change in net and cash equivalents, and then we get the closing balance. That is what we the formula that we use to calculate there. So the figure that we want to calculate there is net change. So this is the figure that we want to calculate. So if you make it the sum of the formula, we are going to say closing balance minus opening balance. So if you come here in terms of cash and cash equivalents, let's try to check there in the list of balances that we are given. We are given that cash and cash equivalents at the beginning, it's here, this column, we have 16,000. And we check if you've got an overdraft under current liabilities. If you've got an overdraft, we say this balance that we have minus the overdraft to get the balance of cash and cash equivalents at the beginning, which is the opening balance. But here we are seeing that we don't have anything for bank overdraft. We don't have anything for bank overdraft there. It's only a 0, so we don't have anything. So we are just going to say the opening balance is 16,000. Then at the end we have 9,040 for cash and cash equivalents, and we've got an overdraft that is there for 110,000. So the closing balance is 9,040 minus 110,000. Obviously, we get a negative figure there. So what we are going to do is we are just going to do that here. So our opening balance is 16,000. We said we are saying minus opening balance. Let's start by the closing balance, which is 9,040. We subtract the 110,000 for overdraft. So this one will make the closing balance. So for the opening balance now, we know that it's 16,000. It's only this one which is positive 16. So it's saying minus 16,000. So this is the calculation that we are going to summarize there. Then the answer is the net change in cash and cash equivalents. So here we have that net the section for calculating net change in cash and cash equivalents. So we are going to say, 5,000. Let's check again the figures that we have there. Right, we are going to say 9,040 minus 110. 9,040. 9,040 minus 110,000. Then we put it in brackets, subtract 16,000. So if you calculate it very quickly, you are going to get 116, a negative 116, 960. So this becomes our net change in cash and the cash equivalents. So that's how we calculate it. Then we check the next item. Okay, the question is now saying also indicate whether this is a net inflow or net outflow. So we are seeing it's a negative, so it's a net outflow. If it's a positive, it becomes a net inflow. So that's what we have there. Then we check what we have next there. We go to the next page. Right, the next page is saying cash effects of investing activities. And we know what we are going to include under investing activities. Under investing activities, that's where we're going to have a purchase of non-current assets and any sale in terms of disposals, any disposals of non-current assets, and also check the movement of the fixed deposits. If we have got an increase or decrease of fixed deposits, then we adjust for that. Those are the main items that we are going to put under investing activities. So we go to our question to check what we have in terms of those items. Mainly, we can find those items in the additional information that we are given. Right, we check there if you have got any purchase, any disposals that took place. So in this case, if you go to the additional information that we have, let's go to item D. Item D, we have got additional property was purchased for 1,400,000. No other fixed assets were purchased. So it means we only purchased for 1,400,000. So that's the purchase that we are going to include in the cash flow. So we go back again there under that section, and we are going to say this is purchase of fixed property. Purchase of fixed property. No calculation needed there. We're just going to say 1,400,000. 1,400,000. And whenever there's a purchase, we show it as a negative because there is an outflow. So we are going to indicate it as a negative. Then we go to the next item on that additional information. Right, under that we are told that one of the vehicles was sold at carrying value. Was sold at carrying value. It means the carrying value of that vehicle was the money that was received for the disposal. So here we are not told of any cost of that vehicle that was disposed, or any accumulated depreciation of that vehicle that was disposed, so that we can find the carrying value. So it means we cannot find it using those figures because they are not there. But if you go to the information that you are given in the list of balances there, we are going to see that we have information that we are given in terms of fixed assets at carrying value. We have got 4,010,000 at the end, and then 2,690,000 at the beginning. So what we are going to do, we are just going to open a T account and try to put those figures that we are given in the list of balances. We open a T account, and we know that we put the balance at the beginning, or the opening balance at the beginning at carrying value, and then not at cost but at carrying value. Then we have got closing There now we have closing balance, and also at carrying value. And then we have the depreciation for the year will come on the credit side, and the carrying value for the year of disposal of any non-current asset that was disposed will come on the credit side. So this is the figure that you want to find, and this becomes the figure for the amount that was received for disposal. So here also we put the value for purchase, and we already know that it's 1.4 million. So this is the scenario that we are going to. So basically, you can put that T account here to put those figures. Right. If you check in the question there, let's check the balance that we are given there. We are given that at the beginning, fixed assets at the beginning there is 2,690,000, so it's going to be to the debit side of that account. Then at the end, the carrying value is 4,010,500, so it's going to go to the credit side. Then in terms of depreciation for the year, you can find it here. It's given here. We are seeing that depreciation is 420,100. So this depreciation is going to come also on the credit side. And then the purchase, we know, is 1,400,000 that we put on the purchase of the non-current asset there. So we put that one on the debit, and then we find our balancing figure. So if we come here on our T account here, we're just going to put those figures. Right. We know that the carrying value at the beginning is 2,690,000, and then carrying value at the end, we are giving it there, is 4,010,000. Sorry, this is the opposite. We are doing the opposite there. The carrying value at the beginning is here. We put it here, 2,690,000. Then at the end, it's going to come here, which is 4,010,000. And the figure for the purchase, which is this one, will come here. We see, and we saw that it's 1.4, it's 1,400,000. And then the depreciation, we saw it there in the balance that we are given there at the start of the page. There is 420,100. And the figure that we want to find is this one. We can call it X. And you can only see that to find X, we can only say this one plus this one minus this one minus this one to find X. So we are going to say 2,690,000. Then we add 1,400,000. Then we subtract this one. We subtract the ones on the credit, which is 4,010,000, and also subtract this one, 420,100. And then if you do that correctly, let's try to calculate that one. Let's try to calculate that one, which is start with 2,690,000, then we add 1,400,000. Then we subtract 4,010,500. Then also we subtract 420,100. $420,100. So the answer that you get is 340,600. So that's the answer that we are going to put there. Right. So we are going to summarize that working here and say this is now uh, the disposal, fixed assets disposed. You can say fixed assets disposed. So this summary of the working, we are saying 2,690,000, and then we are adding 1,400,000. Then we are subtracting 4,010,500. Then we also subtract 420,100. Then the answer that you get 340,600. So that's the figure for the carrying value. And we are told that the carrying value is the amount that that non-current asset was disposed. So we received 340,600. And whenever we dispose, we are receiving cash, so we show it as a positive. So we are going to leave it as it is. Then we check the last one in the list of balances that we are given. Check the last one in the list of balances that we are given. Right. We also have fixed deposits here. Fixed deposits, financial assets in brackets, fixed deposits. We are seeing that it was 700,000, and then it increased to 550,000. It was 700,000, and it increased to 550,000. So whenever a fixed deposit increases, that's a negative, it's an outflow. But when a fixed deposit decreases, that's an inflow. So here we are going to find the difference 700,000, then you subtract 550,000. So this one is a decrease, so it's showing a what? A positive. This one is a decrease, so it's showing a positive. So we're going to say 700,000 minus 550,000. Then the difference that we are seeing will show us as a positive. So we can just summarize the working there. So we can, this is the last item that we have. We can say fixed deposit. We can just say decrease in fixed deposit. And we are saying 700,000, and we are subtracting 550,000. And if you do that, you are going to find 150,000. And we say the decrease is a what? Is a positive, and then increase represents a negative. So this one is a positive. So here now we can now find the cash effects of investing activities. Here the figure here we can find it by saying 1,400,000. This is a negative 1,400,000. Then we add 340,600. Then we add 150,000. Then here we are supposed to get 909,400. Right. So that's what we have in terms of the requirements of the statement of cash flow question that we have in this question. Then we go on to the next one. The next one is saying calculate the percentage operating profit on sales. So basically, percentage operating profit on sales, we are just going to say operating profit over sales. Then we multiply by 100 over 1. So you can just check those figures in the list of balances that we are given. Right. If you come here, those figures we are given there. We are seeing that operating profit is 450,000. Here 450, and then the sales is 2,790,000. So we are just going to summarize that one. So our operating profit here, operating profit, we are going to say 450,000 and then we say over total sales, which is 2,790,000. Obviously, you multiply by 100 over 1. When you do that, you are going to get 16.1. 16.1%. This is to the nearest one decimal place. To the nearest one decimal place. Right. The next one is current ratio. And you know the current ratio, we find it by saying current assets is to current liabilities. Remember, the current ratio is different from the asset test. The asset test, for the current assets, we subtract inventory on the left-hand side. Say current assets minus inventory. Then as the figure that you get is now representing the left-hand side. Then you say as to the total for current liabilities. So here we just want the total for current assets without subtracting that one. So we go to the figure for current assets that we are given in the question. We are going to see that the figure for current assets is for the current year is 584,440, and we check the figure for current liabilities. The figure for current liabilities we are given it here is 620,500. So we are just going to make a ratio of 584,440 as to 620,500. So we go there and summarize that working. We present it as a ratio. So if you come there, we are going to say our current assets is found them is 584,440. Then we say as to our current liabilities, which is 620, 500. And remember, a ratio this side should be left as 1, so we are just going to divide both sides by 620,500. 620,500, so that this one becomes 1. And then we say 620,500 into this figure, we are going to get 0.9 to the nearest one decimal place. 0.9 is to 1. So that is what we have on the current ratio. And the last one is the stock. Calculate the stock turnover. And remember the formula for calculating the stock turnover. We are going to say cost of sales over average stock. Right, the answer that we get is we should present it in times, the number of times that stock is being turned over. And then average stock, we say opening stock plus closing stock divided by 2. So it becomes our average stock. So go to our question again and check in terms of the average stock. We are given here that the inventory is 322,000 at the end, and then at the beginning is 345,000. So you're going to add these two figures, 322,000 plus 345,000, total divided by 2 to get the average, and that becomes our denominator. And then our numerator, we said it's cost of sales. So we check it here, it's here, cost of sales, 1,860,000. See, you are seeing it, 1,860,000. So this is the one that we are going to put as our numerator. So as our numerator, we are going to say 1,860,000. Then we divide it by the average, which we are saying half of the opening plus closing, which is 322,000 plus 345,000. 345,000. Right. So when you do that, you are supposed to get one decimal place to get 5.6 times. So this is the rate at which stock is being turned over. So this marks the end of our question. Guys, let's keep in touch as we prepare for exams. Those who haven't subscribed, please subscribe and share. We'll meet next time. With that, I'm out.